when we're trying to figure out what the future beholds is we want to look at absorption rates. And so what we do on a quarterly basis is to look at how many sales occurred, how many houses are on the market, and how much inventory does that mean for us. Nationally, currently, the inventory is about 10 months. Okay, so if without one new property coming on the market, it would take 10 months to sell the existing inventory. What is generally considered a stable market is 5 to 7 months worth of inventory. And what I've done with this chart is to go back 5 years, and the vertical lines go through the third quarter of each one of those years. And you'll see that presently we've got 5.6 months worth of inventory in single-family homes, 6.4 months worth of inventory in attached dwelling. And this is very much in the norm of what we've experienced for the last 5 years in the third quarter. So we feel that we're really well positioned. We don't have too much inventory. We still have some buyers out there looking. And as long as this continues, we're going to stay in that 5 to 7% range, or 5 to 7 month range, pardon me. Now, break it out further. If you look at this slide, you'll see that outside of 2 areas, we're all in that 5 to 7 month time frame. And the exception being the suburban plains and the suburban mountains. But what I think is very interesting about this one is look at Louisville. Right now, there's hardly any inventory, and there's 4 months worth of inventory. That actually makes it more of a seller's market. Who would have thought? Huh? Now, this slide talks about foreclosures within Boulder County. Unfortunately, I don't have Broomfield figures, but this is a month-by-month showing of how many foreclosures there have been. Overall, we're about 7% above where we were a year ago. And actually, I think we peaked, if I remember right, in about October of 2007. And then it came down slightly, and then it's gone back up a little bit. But third quarter, we came nowhere near to the number of foreclosures that we had third quarter in 2007. So I don't know if the overall trend is going to track down from this point, but I believe that based on the absorption rates, we're taking care of these foreclosures, and it's not really impacting us too badly. Now, all of that being said, there are particular price ranges, and we do these figures for every city. This is Boulder County for both. I've combined single family and attached dwelling. Like I said, right now in certain price ranges we're having multiple offers, and in general it's the lower price ranges of any community. Now, that lower price range varies community to community. So in the city of Boulder, that might be a $500,000 property. In the city of Longmont, that might be $2.25. Okay? So just understand that it's the lower price range based on the community. When you get down to the $1 million plus, we've got about 2.5 years worth of inventory. So what we're seeing is what we believe, what I believe, is that there is a lot of pent-up demand in this area, but until we get that national confidence and some stability on the national level, that the people are going to be sitting on the sidelines unless that price point is acceptable to them. So affordability right now is very key. But once there's some stability, once we see some of those things that Brad's talking about on the national level, I believe that we've got such a pent-up demand that we will really take off. I think that we're in much better position than in LA. Okay? And I think that's just demonstrated by the fact that we've had a much slower rate of appreciation in the early part of this decade, and we have not seen price values drop here.